Let's talk a little bit longer about economic growth in the state, and both talked about transportation. A couple of questions we've had coming in and then reinforced with a couple of cards I have here. One, just the importance of the financial services industry to this state, the impact that Dodd-Frank has had on certain aspects of it. We have a number of community banks, or smaller banks, not necessarily fighting the old traditional definition of community, but the implication of Dodd-Frank. Talk for a few minutes, just each of you briefly, on the importance of this sector to the retention of jobs in this state, and also the opportunities to grow them. Your perspectives on what, if any, impact you in your respective seats, recognizing you're not sitting necessarily on committees of cognizance, but like a Jim Hines is down in that district. But talk a little bit, if you would. I'll start with you, Senator Blumenthal, about the sector and things like Dodd-Frank and where you see things going for this state in that area.
I come from a part of the state that has a lot of financial services industry, and I have worked with them closely in trying to listen and heed some of the messages that I've heard about the need for additional changes in this law. One of the problems with Washington, let's be very blunt here, is the difficulty of accomplishing incremental change. Once the healthcare law or Dodd-Frank is set in stone, changing it incrementally has been very, very difficult. So I recognize the need for improvements in that law, as I do in the Affordable Care Act.
Right.
But so long as the debate is, do we repeal it, or do we have some measure of oversight and scrutiny greater than what we had before, we're not going to make progress. I do think there is the need to have some consensus, and I think there is, on points where additional reforms may be necessary. But we have to recognize here in Connecticut that this sector is very, very important to Fairfield County, and that we have the opportunity to compete very successfully with New York.
We do. Senator, comments you have on that?
Yeah, let me talk about...
We alive back? We all right back there? All right.
Let me talk about two specific issues that I hope we can find some consensus on moving forward. The number one priority for the Financial Services Committee in the last several months of the year was the desire, and this is still the number one priority, to get a rule right that is coming out of the Department of Labor any day now. And this is a rule that is going to set a new standard for financial advisors that are advising individuals on how they put money away for retirement. I think broadly everyone agrees that there should be a clear, easily understandable relationship between a financial advisor and someone they're advising, that you should be looking out for their best interests first, not your best interests first as the advisor. The worry is that this rule is going to come out in a way that would put a lot of business models out of business. Right. That matters greatly to a lot of companies that are headquartered in Connecticut that provide these services. So I've been a leader as a member of the Appropriations Committee, which strangely found itself at the epicenter of this conversation because of some riders that were requested onto the bill to try to find that sweet spot. I continue to believe that we can get a rule that makes the lines of responsibility clearer for consumers, but also doesn't put many of our most important companies here in Connecticut out of the business of giving advice to their consumers. Second, on the issue of how we implement Dodd-Frank. Listen, I think we should be putting the press on to continue to relieve small community banks of some of these burdensome financial regulations. You know, small banks tell me every day that the only people they're hiring these days are compliance individuals. Right. But we also have two really important, what we call mid-cap banks in Connecticut, right? We've got Peoples and Webster that, although are treated for the purposes of Dodd-Frank like a big bank, like a bank that holds systemic risk, actually operate much more like a community bank and have economic risk that look much more like a small bank. And so I hope one of the conversations we're going to be able to have this year as the dust kind of settles on Dodd-Frank is not just how we relieve the regulatory burden for community banks, but also maybe how we take a look at these mid-cap banks that are really important to Connecticut that in a lot of ways should be treated more like the smaller banks than like the bigger banks. So I just sort of point those two very specific issues out as opportunities where I think we can lead as the Connecticut delegation to make a difference for the industry here in Connecticut.
Well, go ahead. Good.
On the first financial advisor rule issue, this is kind of a classic. Washington case study in how not to make a rule. This rule was originally proposed by the Department of Labor. I opposed it literally in the first year or so of serving as a United States Senator, along with a number of my colleagues. It was sent back to the Department of Labor. It was then sent to redrafted to, we believe, the Office of Policy and Management for its review under the regulations review process. We're now going on 5 years, and no one knows what the draft is. That seems incredible. We met with a number of officials recently to, in a sense, urge them, demand that something be made public so that we can see what the latest draft is. And I think that there is a consumer interest here. There's also an interest in the industry and having a fair and transparent process. And the present rulemaking procedure really is broken, and this is the best illustration of it, and it affects a variety of other areas. The tobacco regulations, regulations implementing Dodd-Frank, the failure to provide this certainty and reliability. I think all of it's very important. And even in the area of transportation, I'm on the Surface Transportation Committee of the Commerce Committee, so all of this transportation legislation goes through our committee, but a lot of the rulemaking then implements the legislation, and the rules are often as important, for example, dealing with rail safety, as the legislation. There are now more than 50 recommendations of the safety board that deals with rail that have not been implemented by the FHA, by the FRA, the Federal Rail Administration. And that kind of lag in rulemaking is very important. So we tend to focus on the most visible part of this process, and the rulemaking is equally important.